Good afternoon, ladies and gentlemen. My name is Mr. IBO Richards, CEO of HEJSPAN. HEJSPAN is a division of IZ Corp Exchange in good standings. We're working on these pilots, and we're sort of we're contracted to make so many shows and to see if we really want to get this going and see what the public interest, broad interest is in the hedge fund research. So, IZ Corp Exchange has couples of hedge funds on it, and we just wanted to bring a slight report on what we were thinking, or what direction the exchange would be going in. We look at we have like a fee structure. There's a fee structure that comes through the intelligence of the hedge fund community. It's different in every aspects of the fund industry. You will learn that the mean, or if you will, is like 2%, 1.8% for the managers on IZ Corp Exchange, and that's pretty much what the roundabout fee. But again, it's different in every realm and every aspect of the finance industry, and this is confirmed by Duralison and Co. and backed up by the MCC Trade Commission, which is an overseer of things on the exchange. Mostly what you see in IZ Corp as far as fund goes is you see distressed debt, event-driven alternative investments, and and then you have on one end you have capital preservation, on the other end you have aggressive growth, and they tend to go hand in hand. But a lot of times what you see is you see businesses come in and they put money with the funds, and then when they see it's doing so well, or they see they do research as well, and they have money in other places as well, and they say, well, you know what, I think I'm going to put in more, or I'm going to leg in some more money into your fund. Sometimes the subscriptions rates are closed, and those opportunities aren't available for them, and they have to take out where the manager wasn't going to get out. It's at the manager's discretion, but most of the time the manager does not. On the IZ Corp is the commission, the MCC Trade Commission, it advises them, or orders them, if you will, not to extend their subscription or their plans, or however they deal with the manager. But it is at the manager's discretion. He can go through it. So moving forward, as you can see, the IZ Corp Exchange keeps up with the current regulation, especially in the U.S. equity markets and such, and they're moving forward with the vehicles and products and things that are being established and being sought after by a lot of investors. Hedge funds tend to function in a capacity of secondary markets, and there's always new interest. There's always competitiveness, and the new products include new vehicles, brand names. Brand names remain very popular and pragmatic, but it's just one of those things. It's the beauty. It really is the beauty of the hedge fund world to have advisors that can advise you on secondary markets, because there's a lot of investment there. There is a lot of it, and most business startups come through these markets. Not everything goes straight to the open broad market and just gets put into play. A lot of it is a secondary market, and it could take years. And a lot of times it's better for the investor, you know what I'm saying, because they get to come in and they get to really sit down and watch the business grow. They become part of the business growth cycle, and that propels their profit margins, and it can extend them into putting their business in a better place. So another thing we noticed within the industry is times are changing. Times are constantly changing. That's one beautiful thing about life, and especially in the world of alternative investments, is you always see change. Change is inevitable. Things will never remain the same. 20 years from now, the way we invest, the way we do research most likely will be different. A lot of the core nuts and bolts will be there, but it'll be different. Services and developments and development is a catalyst for not just alternative investments, not just hedge fund investments, but research, technology, just basic day-to-day living. You're always trying to. The one thing about the human beings on the planet Earth is you're always trying to increase or better the quality of life, to make people happy, to make people healthier, to live longer. The little things, a lot of little things that people take for granted. Um, the world always sees those change, and more often than not, it changes, for the better. So going back to fee structure, we see U.S., we see the Middle East, you see the Middle East, the Far East, the Asia, and Europe, and U.S. And one thing we notice is the fee structures are all different, and we're doing research on that right now, and most models are like 22 and 20, and again, those are pragmatics, details. While here at the IZ Corp Exchange, the managers are encouraged to just stick to the 3 and 30 model, because again, with the change, more research is needed. More risk is being taken. There's more leverage on the risk, and I think that's a catalyst again that propels in the investment world the opportunity to always take more risk to get more. And as you're doing that, the fund grows. So if you're gonna just say, well, I'm just gonna stick with a 3, 2, and 20, it's like, okay, what are you doing? Are you growing, or are you just trying to just control money? Or some people are happy like that. But at the exchange, there were many meetings and debates when it was starting, and they were allowing hedge funds to be part of the exchange, that you would not be coming in anything under 3 and 30. It's just not going to happen. It's not going to happen. You'll have to take your business otherwhere. The interaction between people is becoming more complex. We see people coming together, especially in the ideology of emerging markets. People are coming together and they're exploring cultures, and we can do that just via how we're talking right now, giving webinars and seminars and commentaries. And now, right now we're broadcasting as we're broadcasting. People in India are seeing it in real time as we're broadcasting, because one of our main focuses moving forward in 2010, the reason why we got into social media was because of a hedge fund that we had partnered up with, and their mantra was to get into the Emirates, to get into India, to get into Dubai. That was their main focus. That's really all they wanted to do, was invest with people from India, and we were able to start doing business with India, and then came the Philippines and Nigeria and East Africa, and a lot of the Caribbean is big now. We've closed a lot of deals in the Virgin Islands and stuff like that. So we're looking, expansion is real. The growth models are real, and the relationship between people, it always becomes more and more complex, especially due to the technology, which is really interesting right now. One last thing we want to look at, we always talk about assets changing hands. We see that with a fund on the exchange called the Well-Off Fund. They're not much of a hedge fund, but you see, we'll sit down with family offices, and we literally sit down at their dinner tables, and we look at their strategies and how they're managing and protecting and saving and protecting for their families. And more often than not, they'll be with a different company, or their money will be in a different pocket or a different sector of the industry. And once they see the Well-Off presentation, more often than not, they show interest, and they're speculative to interest, especially with the fee structures that are a lot lower, and the new vehicles and the new products that come in, that they move their money towards our funds. And that is, you always see the constant of changing hands, because again, as relationships between people get interactions and relationships between people get more and more complex. So does the investment world and the technology and the products and the vehicles within the technology. You know, everything just goes hand in hand like that, and we always get to see, money changing hands and making money. Sometimes to make money, and especially in the hedge fund industry, you reject money. You just don't pick up anybody's money. You look for that certain type of individual that fits your mantra, that understands what you're doing, that is more like your family or your friend, because you're gonna make them a lot of money. It's not like a retail bank on the corner where you just walk in and say here, and then everybody stops what they're doing and comes over to you and says, hey, this is what we want you to do. Usually the clients and the customer base, they're sought out by the hedge funds. It's more vice versa. And another thing is, that's part of the next topic, which is the science and finance. You see a lot of technicals versus fundamentals. You see there's a whole slew of things, and the science and finance is going to be a 3-day training seminar up in Miami Shores on alternative investments, and we're going to take a real close look and show some investors this new not a project, but this new research that we've come up with. And the science and finance is really exciting. I'm looking forward to it next year. It's going to be a nice big event, and what's going to happen is you're going to see all of the different ways, the new ways that money's being made. That money positions are being taken, fees are being structured, research is coming into a full effect, and many will argue, it's against the grain. That's another topic of it, because the new comes in, the old that established the way, the forefathers and the pioneers of the industry don't always see eye to eye with the new technology and the new brisk featherweight people coming in that literally are like fast moving and full of ideas and vigorous and attacking the market with different approaches. And more often than not, the pioneers like to keep things the way that they've seen it. They need the time and the money and the investment and the success and the proven track record that they have. They want to remain, more often than not, the vast majority of the market is comfortable just making this amount of money in the hedge fund industry. But as the more money is being made, the appetite for risk gets larger and stronger and pretty much uncontrollable. And that's often than not, you see the vacillating between the grains. You stick to the core habits and the core things of that, but you see more risk and you see more opportunity for profit. And more often than not, it's not like breaking the rules, but you see the opportunity for to gain more profit and to gain recognition and to grow more business, expand your business, expand your broad-based networks, and just to build your legacy. And sometimes you go against the grain, especially the new way of doing things goes against the grain versus the way the pioneers of the industry established themselves and fought through the regulation and did things to make it possible for the industry to continue to thrive. Again, my name is Mr. IBO Richards. This has been an HEJSPAN Television, which is a member of IZ Corp Exchange, and this is HEJSPAN, which is a division of IZ Corp Exchange in good standings. Thank you and have a great day.